Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com, is kicking off our 2021 coverage. Chris, you are my first interview for 2021. Thank you for being here and setting us up for the year.
Yeah, Happy New Year. Thanks for having me.
Happy New Year. How was trading for the first 2 days?
It's been an exciting ride. Stocks a big move down, and we're seeing precious metals with this massive rally to the upside. It's everything really a trader wants, especially a precious metals trader and investor. So exciting times for sure.
We're going to talk about the broad market, the economy, gold, and Bitcoin, some of the biggest movers so far of the year. I had to rub my eyes this morning when I woke up and checked the prices. $32,000 Bitcoin. People have been saying $20,000 is the resistance level. It's never going to come back. I've been seeing posts like that. Anyway, we'll talk about it. 32,000, that's incredible. So let's start with the broad market, Chris. Set us up for the year. Sure. What's your thesis?
Right. So there's an interesting way to look at the market. So January is always a very critical year for the stock market. It's kind of like the barometer to get a vibe on which direction the market's going to go. And so here I've got a monthly chart of the SP 500. And just really roughly here, these orange boxes encapsulate the December range. And so the next year, which is this year, if we were to look forward to the most recent box, when the trading this year in the SP 500 closes above that orange box or below it, it's going to signal a trend and a bias. And usually there's a very strong move. We're looking at anywhere from 10, 15, 25% moves in the market when we break the December range. And so right now we are trading in that December range. And until we break out of it, you got to be really cautious. It's going to be probably a choppy market, and we don't know which way it's going to break at this point. So that's kind of our barometer for the next big momentum move. When you look at 2019, it eventually took a couple months, broke to the upside. Stock market rallied 13%. In 2020, it broke to the downside. It fell 25% from the following month to the spike lows. So and then when it broke to the upside later in 2020, we saw a 15% move. So these are very big moves for traders and investors. You want to be trading on the right side of the market. Even if you're a precious metals holder, you pretty much want to still be in line with the broad market because it'll pull metals and miners up and down with it.
Okay. Yeah, that's a good point. People often talk about gold as being a hedge against the stock market. I don't necessarily agree with that definition, because the definition of a hedge is something that moves in the opposite direction, but very often they move in the same direction, doesn't it?
Yeah, they're not. It's not a hedge. It's more of an insurance plan on things kind of really falling apart. But when the stock market sells off, we see metals go down in miners. That's just the way it pretty much is.
Yeah, especially the sell-off we saw in March this year. Now, some people I've talked to have said that we might be headed towards another March 2020 style sell-off again in 2021. That is, not great news for equities investors, obviously, or for any investor. Do you see that happening? Do you agree with that?
I do. I think it's going to be a very volatile year. I think it's going to be a lot like last year. We could see a 20, 25% correction, maybe more. Again, we're going to really focus on this December range, see which way things go. But we are definitely in a sector-driven market where hot sectors are doing most of the heavy lifting, and it's constantly rotating around. 2020 was an amazing year for sector trading, trying to find the best assets to get into. And solar was a huge one. Energy sector was the worst performing, but it's actually clawing its way back. And precious metals right now are starting to set up for another big move to the upside with leadership. So we really got to focus on rotation this year. It's not about probably the broad market. It's probably going to be a pretty choppy year. So you want to make sure you get into these leading sectors that just are like a helium balloon. They just want to keep going up and up and up.
Can you explain why we're going to see choppiness? Because if you take a look at this S&P 500 graph that you're showing, let's take a look at it one more time. If you take a look at what happened this year in March, yes, it went down 30%, but then it climbed very quickly back up. And that actually, people have said that, well, the stock market doesn't correlate with the economic reality. But if you look at the earnings of some of these sector leaders that you were talking about, if you look at retail sales overall for the United States, these numbers have climbed up dramatically, a V-shaped recovery in sales for a lot of sectors. And so, we're not seeing signs of this cracking anytime soon. So why would one?
Yeah, there's no doubt. It seems, when you look at unemployment, everyone's got a mixed signal on where we are in this economic cycle. People are saying we're in the worst recession ever, and then other people are like, well, you know what? We're sold out of product. Products are just flying off the shelf. Luxury products you can't buy. Everything is sold out. I mean, people are buying things hand over fist. Yes, there's a lot of unemployed, but businesses are still that are selling products that people need and want in order to stay home and survive COVID, I mean, are doing exceptionally well. Stock market definitely doesn't reflect the overall economy. A lot of times it's leading the market dramatically. And that's probably why we've seen this big move is people are expecting this COVID to kind of fade away eventually, and we're going to be bounced back to normal. So that's why stocks are moving up going forward. They're looking much more forward than where we are right now.
Right. So if we were to see a sell-off in the stock market, what could be a trigger now? Worsening of the COVID situation?
Yeah, the trigger will be breaking the December lows. I mean, there's probably going to be news that comes with it. People were talking about this week that, people are pricing in a Biden kind of movement. And so they're selling off. And of course, that is good for metals. People are into the metals sector. There's probably going to be some event that sparks it. But I mean, eventually the stock market loses its momentum. We're actually seeing a lot of market internals, the market strength actually reverse. And it might reverse this week in terms of, if you look at what utilities are doing in relation to the SP 500, you look at high yield bonds to treasury bonds, look at gold to building materials, you look at a whole bunch of different ratios and you blend them all together and you're like, wow, everything is actually showing signs that we're losing momentum. This market is about to pull back. So I think January is going to be choppy. I think we could end up closing below the December lows. But again, I'm not going to jump in front of it. I'm going to wait for confirmation because the underlying breadth of this market is eroding at this point.
So what are the sectors that you do like? You mentioned that certain sectors will outperform in 2021.
Right. So the general rule when you're trading hot sectors is you still need to trade in line with the stock market. If the market breaks down, you don't want to be pretty much in anything other than maybe long bonds for a window of time. But when the market is favorable, I like the EV market, which is the electrical vehicle market. Believe it or not, clean energy is still leading the way. Solar is top of the list. And one interesting one is the OIH, the oils holder ETF. It was the bottom of the barrel in 2020, and it's clawed its way back to be near one of the top sectors. It's picking up speed very quickly. And energy, crude oil chart, they all look really bullish for another big extension higher. So I think the energy sector, both clean and dirty, like the oil, could actually be a very good play this year.
People have talked about the clean energy sector, but how do you play that sector? What are the instruments you would use?
Yeah, so there's an ETF called PBW. It's a clean energy ETF. And then there's another one, solar sector, which is TAN, the TAN. Okay. Those are kind of the two that I follow. I know there's a ton of ETFs based around both of those, but those are heavily traded and I like those ones a lot.
Okay, let's take a look at gold now. Let's pull up a gold chart, another commodity or an asset class that has moved dramatically, except in the opposite direction of stocks. So if you take a look at what happened in the last just 2 weeks, dramatic move upwards from, people were losing hope a while ago, but now it's bounced back.
Yeah, exactly. People were definitely losing hope. You and I talked actually, this is the monthly chart, but you and I talked as gold was free falling towards this 1810, 18 mark.
Yeah.
And there was panic that day when you and I were talking about this. And I said, this is what we want. We want panic. This pullback is actually a measured move down to this area. It's very bullish that people are panicking at a major support level. And since then, we've seen this huge move to the upside. This monthly chart really shows the 2011 highs, the multi-year base, how we broke out of it in 2019. We've had a rally, a pullback, another rally, and a pullback. And this is primed and ready. If we were to squish this chart down, gold is primed and ready to go all the way up to potentially the $2,400 level from here. So there's a lot of explosive power built up in gold. And I really like the way things are setting up for this.
$2,400. Is that expected this year or next year? What's the timeline on this?
Based on this chart pattern, it would be definitely probably the first half of this year or mid this year, I would think. That's just based on this pattern. Now, if for some reason gold pulls back from where it is and consolidates in a much larger flag, that's going to delay things, but it's also going to build more power for when it does break out down the road. So at this point, we're looking at mid this year, 2,400 in gold.
You mentioned that the equities markets, the broad market, could see a pullback as well. Would that bring down gold like it did this year?
It would, yeah. And that would be the whole thing. So if the stock market does have a sharp correction, we're probably going to see gold pull back, continue to flag sideways in this bullish pattern. And then eventually when the conditions are good and it can overpower the selling pressure, we'll see gold really take off and start to extend to the upside.
A common question I've been getting from people I know is when a good time is to get into gold. Should you be waiting for pullbacks or should you just buy now and hold? Because I guess what you're saying applies to any asset class, right? It's going to pull back and then consolidate, move back up. But if you keep waiting for pullbacks, you're never going to get in.
Right. It really depends on the type of trader or investor you are. If you're an investor, you should be buying these pullbacks like to 1800 when people are panicking and it's pulled back into a support level like this 1800 level across the chart. If you look across here, I mean, it was the high in 2012. We had a bunch of monthly highs and then it traded through it 2 days. I mean, it is a prime candidate for, it broke above to new highs and then it pulled back to support. I mean, it's a prime condition. So investors should be buying and holding gold long-term. When you look at a short-term trader, if we were to flip to the daily chart, it's a bit different of a view. Here is the March crash on the left, and then we had the rally, a consolidation, a huge rally, and now a bigger consolidation. And price is just starting to break out from these highs of this pattern. If you look here, this week, it just broke above this falling trend line. So it's a clean break, but we're still struggling with this high that we saw back in November. And gold miners are definitely lagging. If we look at silver and silver miners, it's a much more bullish and exciting picture than gold itself, actually.
Yeah, I'm gonna get a little philosophical now. So the notion that we should be holding gold long term. Okay, I hear that from basically everybody I talk to. Can we pull up a long-term gold chart again? Just take a look at the last 10 years, going back to 2011. So the last time gold reached a high, Chris, was 2011.
Yep.
And then it just kind of flatlined for 10 years. Not 10, but 8, 9 years.
Mm-hmm.
The notion that we should be holding it during that time, by the way, the S&P 500 outperformed gold by a significant margin over that 9-year period. So the notion that gold is a store of value over the long term, really, the definition is inconsistent at best, isn't it?
It is. I mean, if you actually want to really beat the market and do really well, you need to use technical analysis to block in these topping patterns. I mean, once you see these huge parabolic spikes and price starts to consolidate, whichever way it breaks from there is going to be a very big move, at least the distance of this box. If we were to look at the price action where gold is right now, we've had this parabolic spike, we've had this pullback. For all we know, gold's already put in a top. Nobody knows until it's done, right? But we're in this big range right now that maybe it's over. Maybe it's going to chop around here. Maybe it's going to break down and consolidate for several more years. We really don't know. The thing is, the long-term chart is still pointing to higher prices at this point. Mm-hmm. The falling currencies are going to help with this. I mean, we're in a major new commodity cycle, like a 15-year commodity cycle. And everyone has been into equities and homes, and commodities are the most undervalued kind of asset class. So there's a lot of things pointing to much higher prices, but we really do need to see which way gold breaks from this pattern. If it breaks to the upside, it's going to run to 2,400 very quickly. Okay.
And gold miners, I know you follow gold miners. What do you think about that asset class?
Yeah, the gold miners are great. You can see here, this is the long-term monthly chart. They really broke out mid last year. They've pulled back to support. They're starting to move up. This is primed and ready for it to continue to go quite a bit higher. So I like gold miners. I think they're going to become a major leader here in the first half of 2021. And they're going to outperform a lot of sectors. And that's what we're seeing already. We saw a sell-off on Monday in stocks, and the precious metals sector just rocketed higher. And that's usually the sign that the stock market's close to a more of a pullback. So I think there's going to be some mixed signals going forward, but metals are the spot to be, I think, in the next month or so.
All right. Now, finally, Bitcoin. I mentioned we talk about Bitcoin. $32,000 is the latest price I'm looking at right now. Everyone was expecting a pullback well, not everyone, but the people I've talked to have been expecting a pullback at the $20,000 level before climbing back up. That didn't happen. Are we just delaying that pullback, Chris? Is that pullback going to be even more significant now that we're still shooting up? What do you think?
Yeah. So when you've got a basing pattern like the bottom blue square on this weekly chart, typically when you've done a multi-year base like this or a big basing formation, typically you're going to see 2 to 3 times that on the rally to the upside. And so we're almost at 2 times that level. 36,000 is pretty much the upside kind of target. Now, the more something, as you just said, goes straight up, the more likely it's to come straight back down very quickly. So while this is an exciting move, it's not a sustainable type of chart pattern. And you better enjoy it while you can and start ratcheting up your protective stops, because when it does reverse, it's going to knock your socks off. So you got to be really cautious with something that goes straight up. It's pretty much a ball bouncing, right? And what goes straight up comes right back down again.
That's a very good analogy. Chris, finally, let's talk about your workshop. Now, you teach people how to trade. So you have one coming up. Give us a teaser of what you'll be talking about.
Sure. Yeah. On our website, I'm hosting a webinar each day where in 60 minutes, I teach you how I trade the BAND strategy, which stands for best asset now. It's a relative strength strategy. It's how to find the market leading sectors using ETFs and to play the biggest sectors throughout the year. 2020 was a huge year for sector rotation. If you're in the right sectors, you made a lot of money. 2021 is going to be the same way. We've got new president, new tax laws, new policies. COVID is still here. Lifestyles and businesses, the way they run, are changing. So sectors are on this huge, massive tear, either selling off huge or making big gains. And those are what you want to be in, because I think the stock market's going to be choppy. And I teach this strategy in 60 minutes, everything you need to know, no proprietary tools or anything. You walk away knowing when to enter, how to manage the trades, take stops and targets, all that stuff. It's a real crash course, but really detailed. And you get a guide at the end so you can, follow the guides and the steps to trading the strategy afterwards.
So if I watch this for 60 minutes afterward, I'm going to be as good as you?
You'll be caught right up to me.
All right. Well, that sounds like a great deal, Chris. Thank you so much for being with us today. Happy start to the new year. Happy trading, and I'll catch up with you soon.
Thanks, David. Always a pleasure. Take care.
Thank you, Chris. Happy New Year to all. Happy 2021. I'm David Lin. Stay tuned for more.